Thanks, everyone. Thanks, Jackson and Stewie, for having us here, for this opportunity. We're talking about technology stocks in this presentation. Well, you'll hear a lot of life sciences companies present today. Today, in this opening chat, we'll have a little bit of a look at semiconductor stocks in particular, and a few non-semiconductor stocks on ASX, but mostly about semiconductors, because that, as you follow the news, you can see that that it's basically the new oil, semiconductors. It's used in geopolitical conflicts as well as just getting, one nation getting ahead of another one using technology and semiconductors specifically. So title for today is Get Ready for the Next Bull Run, but I think the title really should be, when is the current large cap bull run going to end? And before that happens, will small caps actually catch up? Because they've been lagging quite a lot. As Stewie said, Stuart and I, where's Stuart over there somewhere? Raise your hand, Stu. That's Mr. Biotech. I know a little bit more about technology, not so much life sciences. That's all over my head. Way too complicated for me. But Stewie and I set up Pitt Street Research 9 years ago now. And the good thing about that is you as an investor, you can sign up for all that research for free. So unlike brokers that write this research just for their clients, and sort of ring fence it, you can just download it from a website or sign up for the emails, and you get all that research in your inbox when we publish it. Same with Stocks Down Under. That's more of a news site with investor news that we publish on a daily basis. Every Saturday morning we send out a newsletter that you can sign up for free as well. So check that out. Any lawyers in the house? People from ASIC, this is especially for you. We'll skip that. All right, so who are we? That's Stuart, the handsome guy on the left there. Here's Mr. Biotech. He pioneered this sector about 20 years ago at Bell Potter, when no one else was looking at life sciences. And there's no one that knows this industry better than Stewie, and the companies that present here today will probably acknowledge that. Myself, I moved here in 2014 from Amsterdam. I covered technology stocks in the Netherlands and Europe, and the US a few as well. Moved here and actually found that there was 1 or 2 semiconductor stocks listed on ASX, and that was to my surprise. But we've come a long way since then. We've founded Pitt Street Research, and today, I think in total, we've covered about 150 companies since we went live with that one. And most of these companies start out below, say, 100 million market cap, and then hopefully they move up, of course. We've seen companies like Weebit Nano that's become an ASX 200 company in that time, and they're still with us as a client. But that's the sort of work we do. We start with these companies when they're small, and hopefully, we can see them grow up to become adults. So title, like I said, of the presentation is a bit different than what I've got here, because if you look at large caps, they've had a massive run already, right? If you look at NASDAQ, that set all-time highs just last week. So the question really is, when will this mega cap bull run end? Because that's been going quite strongly. And then for small cap investors, and most of you will be investing in small caps, otherwise you probably wouldn't be here. Will the small caps catch up with that? Because they've been lagging this sector. Sorry, this bull run in large caps. In order to sort of get to the answer for that, we need to look at a couple of drivers, a couple of trends in technology. I've listed 5 here in random order. Although, if you look at the first one, any title, any headline that says Trump in it, and you can blame Trump, always does well with people. So put it at the top here. Donald Trump blocking China from accessing leading edge technology. It's not just Trump that's doing that. Biden did it before him. But it's a key driver. There's some dynamics that come out of that, and we'll talk a little bit about that. Trump just last week announced a 100% tariff on semiconductor imports into the US for companies that don't have facilities in the US, manufacturing facilities, or companies that have not said that they will be moving their production over to the US, right? So that creates a whole different dynamic in this industry. The biggest important driver here for any sort of valuation, especially with these high beta stocks like life sciences and tech, of course, interest rates. We'll talk about that as well. Artificial intelligence, you'll have heard a lot about that. And I think this year, 2025, is the first year where we're actually seeing massive productivity gains. So initially it was a lot of investment, and now we're actually seeing, also for smaller companies, we're seeing massive productivity gains. We'll talk about that. And finally, the regular sort of boom and bust in semiconductors. And if you invest in mining stocks, you'll know all there is to know about boom and bust. It's the same in semiconductors, has been for the last 30 years since I've been covering this sector. So just jumping in here with China. If you go back, say, 8 years or so, sort of the tail end of Trump's first term, and then Biden coming in, they were putting the screws on China in terms of getting their hands on leading-edge chips, or most advanced chips, as well as equipment to actually manufacture those chips, which is a big problem, because if you look at the most advanced machine in the whole process of manufacturing chips, which is a lithography machine, which actually prints the circuits on the chips. There's a company, it used to be a tiny little company that I started covering in 1995. That's now the biggest chip equipment company in the world, ASML out of the Netherlands. They've got equipment that it's taken $20 billion just to develop that machine, and these days they sell them for about $400 million US each. And that is to manufacture the tiniest chips possible, right? So that's what TSMC uses for the smallest chips that are out there. So the US has said, well, any company that uses our technology in their products and sells that to China, they need our approval for that. And guess what? ASML didn't get it for the most advanced machines. So China is now stuck with older type technology. And also NVIDIA is not allowed to export the most advanced AI chips to China, right? So that's created a completely new dynamic in China to be more self-sufficient. So they've started spending a lot on research and development, not just on chip manufacturing, but on equipment as well. And so it's going to take a long time if they ever catch up, to catch up. But my guess is they'll catch up on the manufacturing side, but not on the equipment side. It's just too complicated to do that without industry-wide support from the whole world, because there's all these little parts that need to contribute to developing a new machine like an EUV machine from ASML. So I think they might not get there. And if they do, it will be 30 years from now. So there's a big problem for China. They are working on that. The interesting thing here is that China itself in this space has become more assertive, right? So it used to be that China had a name of stealing IP from Western companies. Now it's starting to go the other way around, because just last week, a small Chinese company actually filed a lawsuit against Applied Materials, one of the biggest equipment players in the world, for IP theft. So that's an interesting development in itself. And I think in the next 20 years, this particular geopolitical sort of dynamic will play out across this entire industry with lots of chances for investors. Just looking at Chinese companies that you could invest in over time. It might be a bit early now, but that time will come, I think. Then the other thing on imports, on tariffs on imports. This is just announced last week. Any company that doesn't have manufacturing facilities in the US, so Intel does, obviously. TSMC now does have a fab in the US, but any company that doesn't and that wants to sell their chips into the US will face a 100% tariff on these chips. And that's massive, because it means that companies that want access to that market will price themselves out of the market. If they want to get their chips sold in the US, they're twice as expensive all of a sudden. And their customers might not want to buy those, right? And you can't blame them for that. So we'll see a lot more companies trying to get some sort of foothold in terms of manufacturing in the US, I think, over the next couple of years. And the US may actually regain some of their dominance that they've lost over the last 40 years. So we see, even though it's a very blunt tool, I think it actually will work in the next sort of 5 to 10 years. The US will become stronger again, as they were, say, 20, 30 years ago in this space. And the point here for investors is don't just put all your money on the TSMCs and NVIDIAs of this world. There will be smaller companies listed in the US that will benefit from specifically this tariff. Well, this is the most important one when you talk about valuations for the market. It's interest rates coming down, either due the fundamentals. We've seen this now in Australia, for instance, a bit late in my book, but we're seeing it come through now. In the US, there's a lot of political pressure, and I think probably moving into 26, we'll see a couple of rate cuts in the US. Probably the first one in September is already sort of priced in, I think. So we might not actually see a big response by the market because of that, but what's coming after that is probably more important. And just last week, Scott Bessent, US Treasury Secretary, said, yeah, actually we want to see these rates come down by 150 to 175 basis points, which is a pretty massive move. If that happens, I don't know if it's going to happen, but if that happens, or even just 1% would be good for these high beta stocks, technology, life sciences, and I think on the back of that we'll see more private equity and venture capital activity. because money will be cheaper. The price of money is coming down. And the same for M&A. So within sectors, you may see more acquisitions, which could be interesting, if you're looking at the smaller players within certain sectors, especially within technology, or semiconductors. There's always been a lot of M&A going on. Big companies buying smaller companies, not so much for their manufacturing capacity, but more for technology, for IP. And so I think that could be really interesting in the next sort of 12 to 18 months. Well, artificial intelligence, I think this year, like I said, is the first year where you will see a lot of productivity gains actually coming through. So ChatGPT 5 was launched just recently. And if you look at sort of the articles and the podcasts around that, it's much more powerful than number 4. It can do a lot more, fewer errors in the outcomes of in the answers that you get. So I think this will remain a very hot segment for at least 15, 20 years. It's sort of comparable to what we saw with the dot-com boom starting in the mid-90s. A lot of investment going into it. 80% of those companies failed, but the ones that survived did really well. Just look at Amazon, for instance. This time around with with AI, it's slightly different because you see all these mega caps investing billions and billions of dollars in that. So they'll survive, no problem. It's just a matter of who within that large cap segment will be the winner. I don't know, and it's hard to bet on that. But if you look at smaller companies, they'll now be able to implement productivity gains that we're now seeing that are coming through. And I think they can do that better than the large caps. Let's say a small mining company looking at data from their surveys will be able to implement this maybe quicker than, I don't know, BHP, because with BHP everyone has to move, right? It's a big ship to turn, while smaller companies are more agile. And it's not just in mining, it's in every sector. So I think that can be a game changer for smaller companies. If you're a software engineer, actually, this is an interesting one. ChatGPT can now program or basically code complete software programs. So when you put your kids through college, say 15 years ago, and told them to study software and that sort of stuff, all of a sudden they're out of a job now because AI can do it much quicker. So you're better off as a plumber or Sparky. That's a very interesting development at the moment. All right, finally, the typical boom and bust in semiconductors. Now, like I said, this is a very volatile industry. You can compare it to the lithium price and the boom and bust coming out of that. It's similar in semiconductors. It's stabilized a little bit over the last sort of 15 years because companies have become slightly more rational. But within especially DRAM, so the memory side of this industry, it's still boom and bust. If people can make money, they'll invest a lot of money, a lot of capital in that, and all of a sudden you've got way too much capacity and prices start coming down. That's still the same dynamic. But the interesting thing here is, and I'll talk about that with a few in stock tips in the next slide. DRAM, which is the main sort of memory chip, is now being used for AI, for artificial intelligence, and they call that HBM, high bandwidth memory. So what they do is they stack these chips on top of each other, really close together, really close to the processors, so that AI has the most benefit. It's the most efficient when the memory is close to the actual processing. So there's an interesting stock in that space, but overall you can say there's still a boom and bust. Chip stocks compared to NASDAQ have actually lagged in the last 12 months. So NASDAQ has made new highs. It's gone up quite a bit. Chip stocks have actually lagged. They've gone up a little bit just in a few recent months. But overall, there's still an opportunity for a catch-up there. And in the space, we like the sort of the picks and shovel stocks, like equipment plays, and the high bandwidth memory plays. So to wrap it up, what do we like? Well, on ASX, we still like YStack. I mean, after the PANS violation issues, that stock is now sort of starting to come back a bit. We like Megaport. That broke through the downtrend recently, if you look at the chart, and it successfully tested a downtrend. 1560 is now the level that it needs to break, if you want to become long-term bullish on that stock. In the small cap space, Weebit Nano and NanoView are two of our key picks. Stuart and I both own shares in Megaport, Weebit, and NanoView. Just full disclosure here. That's how much we like him. These are plays, and you look it up on Pitt Street Research. We've done the deep dive on these stocks, and if you read that research, you can see why we like it so much. Internationally, I've got 20 seconds left, so I'll go really quick. If you don't want anything to do with researching stuff, just buy an ETF, semiconductor or a NASDAQ ETF, you'll be fine. Picks and shovel stocks, ASML, Applied Materials. These are equipment manufacturers that are doing really well. I'll skip NVIDIA, everyone knows that. Micron is the one I wanted to point out, a US-based stock that does DRAM, has been doing that for 50 years, but they've moved into high bandwidth memory chips, and that's being used by AI. SK Hynix in Korea is the leader there. The share price has had a massive run. Micron has actually lagged, same with Samsung, also in this space. But Micron is the one that can still play catch up in this space. So that's one I would look at if I wanted to invest in the US. So that's it. If you want to read more, check out Chip War, a great book on this industry. And in October, there's Semiconductor Australia for the second time this year. So sign up for that one. It's semiconductoraustralia.com. If you want to know more about semiconductors and quantum computing, it's a really interesting one to check out. And sign up at Stocks Down Under and Pitt Street Research for all our research and newsletters. Thank you very much.